gas with us today. We've decided to make gas transportation as simple as possible. So we take that very successful LNG liquefaction and transportation segment, which has been on fire, and we gave them the roll panel this afternoon at 3:25. We've asked all the propane carriers to take the day off, and so now we're going to focus on all the other gas segments. And so Charles will be here to educate you and to entertain you, and I'm here just to watch alongside of him. We're just waiting for a couple of slides, but we'll get started. We'll get started without them. You know, Charles, before we get into the dynamics of the markets, could you just give us a quick overview of Epic Gas, please?
Of course. Thank you very much, everybody. So I'm Charles Maltby. I'm the CEO and chairman of Epic Gas. We're a Singapore-based owner and operator of pressurized LPG ships. We're the largest owner by capacity in the world, and we've got a current market share of about 15 to 16%. And I'd like to take the opportunity, because it's just the two of us today, to firstly introduce Epic a little bit, but also to put the LPG sector in context a bit as well, and to explain how the smaller gas vessels fit into the broader picture for LPG. Today, as Epic, we have 38 vessels on the water, ranging in size from 3.5 to 11,000 cubic meters, an average age of 8 years, so it's quite young. We do all the commercial and technical management in-house, so we're a fully integrated shipping and operating business. The production globally of LPG is growing, and we've passed over 300 million metric tons last year. It's an important part of the energy supply chain, and it's been driven by fundamental demand for gas as an energy solution, alongside the availability of US shale, the recovery in oil prices, and of these 300 million tons a year, exports or global LPG seaborne trade accounts for over 90 million tons. They've been growing year on year at, for the last 5 years, over 8% a year compound, and it's been an exciting part of the shipping sector to be in. We're forecasting growth this year slightly lower at 3.9% for a global LPG seaborne trade. So Epic Gas, oh hello, we have some slides. So Epic Gas, we're an integrated part of this global LPG supply chain. We're involved primarily in the last mile delivery of LPG into the smaller ports on a global basis. In 2017, we moved about 2.3 million tons of that 90 million tons that was moved. So that's what, 2.4%. If you look at the overall entire pressurized LPG sector, it's responsible for moving 13, 14, 15% of global LPG. So it's by no means a small part, it's a meaningful part of the overall supply chain. Our sector, like most, has been through 4 to 5 years of record low markets, largely driven by oversupply. But since the end of 2016, we've seen an increase in utilization, increase in demand, reduced supply, and a gradual recovery in freight rates. The rates for the smallest vessels in our fleet are up between 20 to 35% year on year, and for the larger vessels, a more modest 5%. The forward supply and demand curve for our sector looks very good, maybe 1% gross fleet growth each year for the next 3 years, and after scrapping it could well be net fleet shrinkage. Maybe Jim, if I hand back to you for a few seconds.
If we could just take a couple minutes and talk about and help us understand the liquefied petroleum gas industry. Can we talk about the types of gas, the end users, what do they use it for? What are the top producing regions? What are the top consuming regions? When you deal with propane and natural gas, you've got major exports out of the U.S. and major exports out of the Middle East, with most of it going to Asia. With your gas business, it's far more complex than that. So just help us understand the gases, the uses, the producers, and the...
So maybe take us to slide 6, maybe, yeah. Back a couple. Great, thank you very much. So, as I said earlier on, 300 million tons a year of LPG is produced. It's produced as a byproduct. 60% is produced as a byproduct of the exploration for oil and methane, LNG, and about 40% is produced as part of the refining process. So you tend to see longs for LPG out of North America, the Middle East, Russia, where there is significant oil and gas production, and also coming out of major refining districts and zones. So we're moving LPG at a macro level from those zones into either the chemical chain for the bigger ships, for the VLGCs, or for the smaller vessels, it's going into end-user LPG demand. So we're looking at bottled gas in the case of what most of our ships are delivering for. So that would be used for cooking, heating, autogas, and smaller scale power plant, power production.
And if we can just put up the complicated map of, yes, of your routes.
Yep. So pressurized LPG, where do we fit? It's very much we're part of the supply chain for LPG going from those major districts I mentioned earlier, so North America, Russia, Middle East. But often the long miles are done on the big ships, and then the shorter last regional miles are done on the smaller ships. The big ships can't fit into many of these ports. The pressurized LPG ships, the smaller ships, smaller semi-refs, can fit into over 400 ports globally. And it means that we're doing very much last mile regional delivery. You can see here on the chart, the green is where the ships in the global pressurized fleet are trading. We track every single pressurized vessel. There are 330 in the global fleet, and we can tell you where any of them are at any moment in time. As part of that, of course, about 40 of those are ours. The trade, as I said, global trade is 95 million tons. About 15 million tons a year are going on pressurized vessels. We can see good demand growth coming through, particularly in the developing economies, driven by ready available supply of global LPG itself. It's really as much to do with the push of LPG as a commodity supply, which is what we touched on earlier on with the big growth in US exports in Russia, but also underlying fundamental demand for LPG as a commodity, as a cleaner energy solution in developing economies.
Over the last 3 years since the trough, you've had between 3 and 4% year-on-year growth in LPG seaborne transportation. What would it take for that to accelerate further? Is it incremental supply, or is it more demand needed?
Thanks. Should we just move on to a slightly different slide? There we go. The overall demand for our commodity, for the commodity we're carrying 75% LPG, about 2.2 million tons a year, and then all of our vessels, along with the rest of the sector's vessels, are capable of also carrying petchems, basic petchems. So about 25% of what we carry is petchems. But just sticking primarily to LPG for now, the demand growth is driven by dozens of small-scale investments into new terminals, new distribution plants, small power plants all over the world. And we can pretty much point to any country on the map which is a smaller developing economy or an island or a country where the population is fragmented rather than dense, and identify growth projects for LPG demand. Some examples, In the Middle East, for instance, Iraq has been coming back online as an exporter of LPG with joint venture projects with some of the oil majors, driving the infrastructure investment and upgrade. They're exporting, started again in 2016. This year it's up 270% year on year. All of these exports are going into pressurized LPG ships for delivery within about 10 to 12 days of Iraq. So we're dropping down into East Africa, India, Bangladesh, Pakistan, and so on. And that highlights the regional nature of our trades, in that the average voyage time for our ships is maybe 6 days at sea, and then you've got the port days each end. So typically on an annual basis, we'd be doing 2,400 port calls on a fleet of 40 ships. So it's a very intense trade. It's a frequent port calls, and it requires a very hands-on operational requirement, and that's why it's useful to manage your fleet and commercial in-house rather than to outsource it. You have better control over what's going on. And it's what the customers who are the blue chip oil majors expect from you. On the another example maybe be in the Caribbean, where we've seen good growth on small-scale power plant projects for propane and butane, and those plants have been coming online in the last 2-3 years. Some projects take 2 to 3 years to come from idea to fruition. Some have taken less than 12 months. And we've been working with the traders and the shippers and the receivers to help those projects go live. In the brochure for Capital Link, today there's a photo of one of our ships working on an island in Honduras. It's very typical of this kind of trade, where you've got very small ports, very shallow water, very simple terminal infrastructure, but the only way that LPG is going to get in there is on a ship of our type, a pressurized LPG.
If we go back and look at the global fleet now, and if you look at the bottom half of the page,
Yep.
can you talk us through, and you see the number of vessels here?
Yep.
So you see the number of vessels here, and you see the percentage of LPG fleet capacity here. You obviously live in a segment where a lot of ships control a relatively small amount of liquid. Take us through the dynamics of the market.
Yeah, I mean, as I touched on earlier on, because the voyages are relatively short, we get more bang for our buck. We carry a lot more cargoes because the churn on the ships is relatively high on the voyage durations. So whilst, for instance, the fully pressurized and semi-ref account for a total of 17% of the fleet capacity, they are carrying way more than that in their market share because they're loading and discharging far more frequently. The fully pressurized fleet are effectively the cheapest way of moving a cube of gas from A to B in a small volume. And that's because they're the cheapest type of ship to build. If you're looking at capital investment cost, they're 20 to 30% cheaper than a semi-ref, 20% cheaper than an ethylene vessel again, and it just adds up. And the reason the pressurized ships are cheaper to run is because they're basically just two very large tanks where the gas is carried under pressure. You don't need pumps to load or discharge the cargo. You don't have to have significant refrigeration, coating, insulation on the tanks to keep the cargo cool. And it also means you don't have to invest into your shoreside terminal infrastructure. You can have a similar, very simple terminal infrastructure for the storage of the gas when you take it ashore. It's a very simple but very effective way of ensuring delivery of low-cost energy to developing economies.
They're not here to speak for themselves, but there's been, over the last couple of years, there's been a little bit of consolidation in the VLGC segment. What's the scope for M&A, either vertically or within your segment? You're 40 out of those 300 ships, roughly.
Yep. I think obviously a lot of people would love to hear a comment about M&A today on the VLGC sector, but we'll maybe step past that one. From our point of view, it's a sector that benefits from consolidation. This is very much our point of view. Once you have a platform in place that can deliver robust quality and safety to the blue chip oil majors around the world, as EPIC does, as many of the larger competitors do have, it becomes a very easy platform to bolt incremental assets onto and to grow the business significantly. If we look at our sector, it's a fragmented sector. There's plenty of opportunity to look at owners who've got 1 to 10 ships and vessels that are maybe 5 years old coming off their original charters. So there's good opportunity to grow within the LPG sector and within the pressurized LPG sector.
Before we move on to the overall dynamics in the market, let's move forward and talk a minute about your customer base.
Thank you. I think across the whole of the LPG sector, this, the logos in the bottom left there, that's typical for any ship owner in the LPG sector trading internationally. It's very much a blue chip customer base who's either in control of the shipping terminals or the refineries, or in charge or control of the receiving terminals or the petrochemical plants. And then, of course, you have the big traders, the Petrodecks, the Vitols, the Trafiguras, and so on in the middle there, playing the arbitrage on the different sources of the commodity and the receivers. And for us, it's the same. And we have a very high retention rate on the customers, as does anybody else within the LPG space. And it's really important to maintain high-quality assets with a high record of safety and quality, so that those customers are safe with the fact that they're entrusting you to carry gas into their billion-dollar refineries or terminals or petrochemical plants or loading from them.
We've talked a little bit about the demand side. Let's talk a little bit about the supply side as it relates to new builds and scrapping, and how your segment is different now than the larger VLGC segment.
Yep. So obviously supply has been high for all shipping sectors in the last 5 years, and pressurized LPG in the smaller ship sector is probably running 2 years ahead of everybody else. Our peak delivery years were 2014 to 2016, and we're looking now at a forward order book where there's 1% gross fleet growth each year for 18, 19, 20. There's a few issues as well as to whether that could even grow substantially, because new build prices have not come down, they've gone up. We're now back to maybe long-term average pricing for LPG vessels, and there's signs that they could push further. There's also question marks over yard capacity, with it having been taken up with other vessel types. For any LPG vessel, you have to have both a yard that can build the hull and then a tank manufacturer to build the tank. And you have to thread the needle on getting both of those to be available at the same time. And then we've also got issues like 2020, which are being debated heavily everywhere else today, which leads a ship owner to maybe just think twice, think 3 times before actually ordering a new build, because you're not quite sure whether you want it to be dual fuel, traditionally fueled, scrubber fitted, or not. So that's factoring in also the exchange rate. All of our ships are built in Japan, and that means we also have exposure to the yen-dollar exchange rate, and that can also be a factor in slowing down new build ordering. So we can't see there being a material change in new build orders for our sector in the short to medium term, just because of that, even though there's an underlying recovery in the market rates.
The level of scrapping, has it exceeded your expectations in the past year?
Yes, scrapping has been picking up across the full LPG sector, whether that's the smaller vessels such as ours or the larger VLGCs. And that's driven not just by market rates, so obviously the bigger ships have seen increased scrapping due to the lower rates, but also by the timing of the ships when they were built originally. LPG ships tend to last a long time. In the last 3 years, we've seen record low rates for our sector the average scrapping age of a ship is 28.6 years. So it's not like we've seen the low rates drive scrapping down to 15 years. It's come down from over 30 years to 28.6 years. This year, the average age of ships scrapped is actually more like 30 years. Again, it's gone back up. But the scrapping levels have maintained for our sector because of the historical build of when the vessels were built. Quite simply, 30 plus years ago, the sector was very new. There weren't that many ships built, so there aren't that many to scrap. But as we've come into the 1990s, there were increased new builds in the 1990s, which are now coming into that 25 to 30 year time frame for being considered for scrap, and those ships are going for scrap. So we're seeing scrapping levels maintaining and even maybe slightly picking up still this year. There are two types of ship in the smaller gas sector. There's the small semi-refs and the small pressure vessels. There's about 325 pressure vessels, about 90 semi-ref vessels. Nobody's really building the smaller semi-ref vessels for the reasons I mentioned earlier, which is they're more expensive to build, but they don't really do much more than a pressure vessel can do. They cost 20 to 30% more to build in yard and have higher OPEX costs. So as those older, smaller semi-ref vessels are being scrapped, the pressurized vessels are taking on their trades and seeing increased demand growth from that side as well.
And since we only have 5 more quarters to discuss it before it happens, let me ask you a couple of IMO 2020 questions. Question number 1, where does LPG potentially fit in the future as a marine fuel? Number 2, although you're in the smaller segments where the scrubbers are probably not part of the conversation, how does it affect your decision making, and how does it affect your competitors' decision making?
Yeah. So LPG as a fuel, we believe in passionately because we think it's a much more simple solution than LNG, whilst also delivering all of the environmental benefits that you would see compared to high sulfur or low sulfur fuel oils and gas oils. The supply chain for pressurized LPG, to any ship is pretty much already in place, in that there's 330 smaller vessels already trading on the water. And just as an example, as part of our operations, every year today, we did 415 ship-to-ship operations last year, just as we are already, which is significantly more than any bunkering operations for, say, LNG. So the expertise and the skill is already in place, and the tonnage is already in place to deliver LPG to ships, and it can be done very simply. So we see LPG as a good solution for ship owners and for ships, but obviously we recognize that there's a solid momentum behind LNG as another solution as well. In regards to scrubbers, the number of tons a day our typical ship burns, so somewhere between 10 and 15 tons a day, combined with the fact that we're in port an awful lot, average sea voyage time is 6 days, means that both our absolute fuel burn and our fuel burn as a percentage per year of days at sea and so on is way lower than many ship owners. Secondly, also, we're in port a lot already, and that means we're already in a 0.1% sulfur zone, not a 0.5% sulfur zone. So a lot of our ships are already burning 0.1% because we're in the even lower zones already. So for us, fitting a scrubber is not an economical solution even over 5 years, unless you attach yourself to the view that for 5 years there will be a $400 arbitrage between low sulfur and high sulfur fuel, which nobody's really predicting at this point. So we're not investing in scrubbers. We are investing in making sure that we have the operational skills and capability to manage the rollout of low sulfur across our ships all over the world in a professional way, where the engines run smoothly, where we've got the right lube oils, where we've got the right testing going on, and we have the right charter parties in place with our customers.
And I want to give you a chance to talk about the sector fundamentals. Vessel values this morning said that they were excited about if I got it right, they're excited about LNG and tankers, but neutral on gas carriers. Are they too confused about the larger LPG ships? And let us, and give us a reason why we should be more constructive on the smaller LPG segment.
I think it's all about supply and demand, isn't it? And we've got 1% a year gross fleet growth each year for the next 3 years on the smaller vessels, maximum. That's before scrapping. And the demand side, historically, it's ranged between about 3.5% and 8% each year for the last 8 years on the demand side. So this year maybe it's 3 or 4%, but it's still way higher than the fleet growth. So we're seeing rates recovering strongly. As I said earlier, the smaller vessels we've got year-on-year rate recovery of between 20 and 35% for the 3s and the 5s in our fleet, and about 5% for the larger vessels. But we're seeing utilization, which is a good lead indicator of the actual rates, going up even more quickly. So we're back up to about 95% utilization across our fleet right now.
Where's utilization and day rates relative to the last peak?
On the smaller ships, we're back to about long-term average on the day rates. On the larger ships, we're still below. And utilization, we're running at close to 100%, which is basically you can't go any higher, so that's a peak. And on the larger vessels, we're running at about low 90%, so there's still room for another 3, 4, 5% recovery. For us, 1% utilization means $1.5 million to our bottom line. So it's a big driver of the bottom line earnings for any business.
And when you get back to those peak rates again, I won't have to wear the Ridgebury hat when I sit next to you. I can wear the Epic Gas hat.
Yeah, we'll have to get you one for those, yes.
Excellent. Thank you.
Cheers, Jim. Thank you very much, everybody. Thank you for your interest in LPG.